The world runs on oil, powering our cars, planes, factories, and even the electricity that lights up our homes. It's the invisible force behind much of modern life, making it one of the most valuable resources on the planet, and a powerful group of nations controls the tap. OPEC+. This alliance holds enormous sway over the global oil market, shaping the flow of energy that keeps economies moving. OPEC+ is a coalition of major oil exporters, led by Saudi Arabia and Russia, that coordinates oil production to influence global prices. Together, they account for nearly half of the world's oil output, giving them unmatched leverage. By adjusting how much oil they pump, they can make prices rise or fall, affecting everything from gas at the pump to shipping costs worldwide. Their decisions ripple through industries, impacting the cost of goods and travel for billions. Their meetings are closely watched, as their decisions ripple through the global economy. Investors, governments, and everyday people all pay attention, knowing that a single announcement can shift markets overnight. But reaching agreement isn't easy. Each country has its own interests and rivalries. Negotiations can be tense, with national priorities and economic pressures often clashing behind closed doors. Still, OPEC+ has shown its power, like in 2020, when it slashed production to prevent a price collapse during the pandemic. This bold move stabilized markets at a time of unprecedented uncertainty. More recently, its moves have fueled inflation concerns worldwide, as higher oil prices drive up costs for food, transportation, and everyday essentials. Understanding OPEC+ is key to grasping why energy prices change and how the global economy is shaped. Their influence extends far beyond oil, touching nearly every aspect of our daily lives. They remain the ultimate gatekeepers of the world's oil supply, holding the power to shape our economic future with every decision they make. In June 2024, OPEC+ unveiled a new plan: keep deep production cuts in place through 2025, while gradually phasing out some voluntary cuts by top members like Saudi Arabia and Russia. The group will slowly add back 2.2 million barrels per day over a year, starting October 2024. But this increase isn't guaranteed. It can be paused or reversed if the market weakens. This two-part strategy aims to support prices while avoiding sudden shocks. For traders and governments, OPEC+ has provided a rare roadmap, reducing uncertainty. The group is evolving, managing the market with more flexibility and long-term planning than ever before. Their goal: stability, not surprises. OPEC+ made its decision amid global uncertainty. U.S. interest rates are high, slowing growth, and China's economy is sputtering. These factors have already pushed oil prices down from their spring highs. OPEC+ is walking a tightrope, keeping most cuts to support prices, but adding some supply to avoid fueling inflation. If prices spike, central banks may keep rates high, risking a deeper slowdown and hurting oil demand. The group is betting the world economy will recover enough into compensation Sobersurditan Sonsumfurtif Banidabor, Bibra Baxter, Wardaudom Dexin on Burfboil Bantabaster, Body Spolmaxer. Weisin Sazandan then Brady Man Borstazadur Tindem demand falters. OPEC+ can quickly reverse course. Their approach cautious optimism, with a safety net. Internally, OPEC+ resolved a major dispute. After years of persistent lobbying and tense negotiations, the UAE finally secured a higher production quota, which will be phased in gradually through 2025. This marked a significant win for the UAE, reflecting its growing influence within the alliance and its determination to shape oil policy in its favor. This carefully crafted compromise kept the alliance united and avoided a damaging split that could have threatened OPEC+ stability and global oil markets. Market experts are divided. Some praise the clear plan for reducing uncertainty and providing a roadmap for future production, while others worry that signaling more supply could push prices lower and unsettle already volatile markets. The move highlights OPEC+'s ongoing challenge, balancing complex internal politics with the need to manage global oil markets effectively. By accommodating the UAE, Saudi Arabia, and other key members demonstrated flexibility and a willingness to compromise, reinforcing the group's unity and strength. The big question now is whether OPEC Plus is being too optimistic about future oil demand, especially as the world faces economic uncertainty and shifting energy trends. Their decision could either steady the market and reassure investors, or add to price pressures if demand falls short of expectations. The world is watching closely to see if this bold gamble by OPEC Plus and the UAE ultimately pays off, or if new challenges will emerge. OPEC Plus is betting on a strong rebound in oil demand for 2025, projecting a future where global consumption rises as economies recover and travel increases. Their outlook is notably more optimistic than many independent forecasters, who remain cautious about the pace of recovery and the impact of new energy technologies. If OPEC Plus is correct, the market will stay balanced, with stable prices benefiting both producers and consumers. If demand falls short, however, the group may be forced to cut production again to prevent a price collapse. The group's built-in flexibility, regular meetings, and the option to pause or reverse planned increases will be crucial in navigating these uncertainties. Long-term, OPEC Plus faces the growing challenge of the global shift to cleaner energy, as countries invest in renewables and electric vehicles gain popularity. By keeping oil prices moderate, OPEC Plus hopes to slow the transition away from oil, making alternatives less immediately attractive for consumers and businesses. The future of oil prices remains uncertain, shaped by shifting supply, evolving demand, and unpredictable geopolitics. OPEC Plus has set its course for the coming years, but ultimately, the world economy and changing energy habits will decide the outcome. For now, the era of managed oil supply continues, and the world is watching closely, waiting to see what comes next.